a bit of chop in the uranium complex lately, and we have multiple interpretations for what we're seeing. This video will be updating UUUU, or the 4Us, which is the Energy Fuels Incorporated stock, as well as the following ETFs: the Uranium Northshore Global Mining ETF, the Global X Uranium ETF, and I'll actually be exploring URA, HURA, as suggested by one of my viewers. I don't know if I'll be trading this one because it is on the Toronto Stock Exchange, but it gives us another perspective on the overall sentiment in the uranium complex. So without any further ado, I'm going to jump right into the 4Us. This is a close-up 15-minute chart, and we have a couple of ways we can interpret this rally since our low that we hit back in the end of January. We have what could be 5 waves up. You can actually count it right here: 1, 2, 3, 4, 5, and this is true across all 4 of these assets, actually, all 4 of these securities. We have a clear 3-wave correction, which is a second wave, and it did go more than deep enough to be a second wave, and we could have a nested 1-2 in place. So again, this would be a larger degree 1-2 with a smaller degree 1-2 in place. You can clearly count 1, 2, 3, 4, 5 up there. I don't love the 4th wave, but it could still count. Clear A, B, and C. And well, now we're waiting to see what this actually is. This is either the beginning of the next wave of the rally, or this is actually an A, B, and possibly a C wave that'll finish a slightly deeper second wave. The same is true in URNM, the Northshore Global Uranium Mining ETF, in which you also have your 5 waves up, although there's a very deep retrace here. So this looks a little bit more suspect. This, to put it lightly, it looks at best like a leading diagonal, maybe at the 1, 2, 3, 4, 5. And we have what could be a nested 1-2 as well. And well, this latest rally looked a little bit more impressive than in the 4Us, but same situation here. We might go a bit deeper for our larger degree wave 2. And finally, we have URA, which is the Global X. And here too, this looks more like a diagonal than any of the other securities, which you have possibly an ABC for the 1, maybe a 2, maybe a 3, 4, and a 5, all zigzags. So that would not be the worst thing. Could be a leading diagonal up. And you have a nested 1-2, which again looked very impressive until we had this sharp pullback. So the best you can hope for here is that this is actually a smaller degree 1 and a smaller degree 2. That's where we're standing. Now, this is the new security that I'm covering that I hadn't covered before. It looks very choppy so far. Very much looks like the diagonal pattern. So we're going to go ahead and shift over to the bigger picture view, which I think I moved into my other window. So let me bring that back here. Here we go. So this is the 4Us, and this is the daily chart. And when we look at this thing, we haven't really seen much of a change big picture. We haven't broken any supports or anything. It still looks like a promising 5-wave rally up, and we're in some kind of consolidation. As a matter of fact, on this view, looks like we might be in a micro 4th wave with maybe a little higher high to go for a more appropriate first wave. Again, in the 4Us stock. If that happens, I would expect us to get to at least the $11 to $12 mark. Otherwise, we have the alternate pattern in which this is just a big fake out B wave with another leg to drop in the C wave. I did mention in the past that I was looking to short this, but we kind of invalidated our downside setup with this rally because we rallied higher than the origin point of what I was calling the first wave down. So therefore, it's a bit of a dangerous short play. I'm not messing with that. Looking at the ETFs, same thing. They're all following almost the exact same pattern. This, again, looks more choppy than the 4Us. So at best, you could call it a leading diagonal. Maybe it's not completely, it could have that higher high for a 5th wave. But again, that lower low does still loom. And again, this has a lot of credibility because our initial pullback that ended at the end of January didn't go quite deep enough for a standard second wave. You expect those to go to at least 30.2%. And when you take the 1-to-1 ratio of this A wave to the potential C wave, that would take us more than deep enough to make for a legitimate second degree pullback. And not only that, that second wave would align with the smaller degree 4th wave within this initial rally. And finally, with this one, this is again Global X, URA, exact same situation. Looks very choppy, very corrective, as we like to call it in Elliott wave theory. It's not a very impulsive looking pattern. It could be a leading diagonal. So that lower low does loom quite sharply within here. And here too, we did not quite have the depth of retrace we would have liked to have seen for this to be a clear second wave down. At the same time, I can't help but admire how clean the preceding impulsive pattern looks. This is textbook standard in every way, even though we came up a little bit short on our third wave, should have gone to at least 2402. But other than that, very clean, very standard looking. Same with URNM. I've already talked about how much I like the pattern UUUU, which is why I was going for the fifth wave blow-off play late last year. That, of course, broke down. But again, things change. When facts change, you got to change your opinion. This is finally HURA, which again gives us another insight and perspective into the overall sentiment. And believe it or not, exact same sentiment. I actually didn't put a fib extension off this 1-2 together, so I'll do it while I'm on air right now. When you look at this thing, it got to our 1.32 extension, ideal for a third wave. And our, well, we actually overextended on our fifth wave, because if you hit the 1.32 on your third wave, you don't expect to get past the 1.764 on your fifth wave. But being a commodity, fifth wave extensions are common. So again, that's a hint for the future. Fifth waves do extend in commodities such as gold, silver, oil, and of course, uranium, maybe even some other metals. So that is where we stand big picture. Again, HURA, it is on the Toronto Stock Exchange. I will not be playing with that one, but it does give us a little bit more insight onto the overall sentiment. Now, if you are looking for these charts, I expect to have some of these links posted in the description below. So feel free to check those out there if you are curious. What am I waiting for now before I make any kind of play? If you accumulated on this initial A-wave dip back here, let me shift back to the 4Us. Good on you. You're probably up quite a bit. That thing fell down to about 544 in the 4Us and more than doubled on this latest rally. But be ready, because it is a kind of a risky place to be in. If this thing starts running, however, then it might be worth chasing from behind. I'm going to zoom back up on the short-term view. So if that happens, I would expect us to very sharply clear that 1058 mark, 1056, something like that. And if that happens, this would be the third of a third. So again, let me recount this. If this is a 1-2, we'd be in the third wave of a much larger fifth wave. So things could go quite vertical for a while. We're seeing similar potential in other asset classes as well. Metals are a bit crazy. We're not seeing as much upside potential immediately in silver, although gold and gold miners may be setting up for something. Definitely have more videos on silver coming up. The same goes for your ETFs. So if you've been kind of nibbling and building up your position, I don't think there's much reason to panic. And if you bought well before this rally, you don't really have anything to fear, because we have a clear 5-wave rally. And well, you're probably going to still be in the black. And if you're in the red, you're not going to be in the red for too long if we do have that pullback, because once we pull back here, if that happens, it's going to launch quite powerfully, in my personal opinion. So there you have it. Update on the uranium complex. I'll have plenty more to come. So don't forget to subscribe, that we don't miss any of my updates in this sector. And if you enjoyed my video, don't forget to give me a like. Till next time, thank you for watching and happy trading.